Hello guys, welcome back to another tutorial. If you're a returning subscriber, thank you. Thanks a lot for the support. And if you're coming in for the first time, please consider subscribing, turn on the notification in order not to miss the upcoming content that'll be coming. So in today's lesson, I'm going to give you the 3 golden entry rule you need to start smashing any trade at all. But the last one is the most precise entry you can ever have. And on top of this tree, every single strategy you trade in this industry relies on this tree for their maximum delivery. So let's get into it. I want to show you one simple something. Recognizing the lowest point of this particular trending movement, that's this particular point, this point, this point, this point, and this point can get you into one sweet trade with maximum returns. Look at it. It's a simple breakout structure. And I map out the last candle before this movement here, and I set a buy limit here, right? And target the next impulsive leg. Can you see how it perfectly come in, tap into it, and what? Go to hit TP. Now, these are cases whereby the market pull back down to what? The last order block before what? The next impulsive leg. But in some cases, the market doesn't pull back to this. That's where the disadvantage of this particular entry model, but it works all the time. You cannot be in every trade. Take, for example, the market did not pull back down to this last candle here. Now, price went up, fine and good. You look for another one. Look at here. We have one candle here, the last candle, and we have another candle here. Price still did not pull back, fine and good. Now, this is the next place you get into what? Entry, where price pull back into what? This particular leg before continuing what? The overall direction. The disadvantage of this entry model using order block, set a buy or sell limit on it, is more often than not, price does not pull back down to the last candle before the next impulsive leg, right? That is when we should employ the next concept. That's the second entry model. That is change of character. Please let me briefly explain this particular concept because it is with a high precision, right? Change of character. If you observe, what do we mean by change of character? Once the market is trending up in this fashion, right? What we mean, the characteristic of this particular trend is what? An uptrend. Once we say the market changed character, that means it changed from trending up into what? Trending down. And we need this change of character at this very point. At this very point, before we can what? Look for the entry confirmation, or it is the entry confirmation. Once we have a change of character, either we use the last order block here or the imbalance within this leg to get into the trade. Let's get right into it. Now, I taught on the difference between swing structure and substructure. I'll link the video in any of these. You might probably have to go and watch that video before coming back to this. That if you don't understand if you don't have full understanding or the difference between the higher time frame and the lower time frame. Take for example, this pullback here, right? Since we have a breakout structure to the upside, we're waiting for a pullback before this continuation, right? On this particular leg, this particular point here, we want to see on the lower time frame a market that is trending what? A price action that is trending down, right? And we want to see a change of character on the lower time frame. From there, we look for what? Either the last order block or the last imbalance to get into the what? The entry, targeting this next impulsive leg. So we need this what? Change of character on the what? The lower time frame. Right? So let's get down to the lower time frame. Take 15 minutes to be my lower time frame. That's what I normally use as my entry time frame. Right. Let's get to that point to see. Now, look at this structure here. I call it the lower time frame structure or the substructure. Look at it here. Now, the market was actually trending up here. We have a high. Sorry. We have a higher low, a higher high, 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 a higher low, a higher high. From this particular point, something happened. The market changed character exactly at this level. The moment we have a candle close, not a sweep, not a wick, please, a body, complete body candle close below this is what we refer to as what? A change of character. The moment we have a change of character here, we know that this market have shifted from trending up, from back to what? Trending down, right? That is where the next entry model is. The moment we have this market shift from trending up to trending down on this lower time frame, then we go back to look for what? Either the imbalance. If you don't understand imbalance, I'll definitely link a video for you to understand. We go to place a sell or buy limit on the imbalance or what? Or on the order block of that particular level. This is of a higher precision than just setting a buy or sell limit using the higher time frame or your time frame or one time frame to set your trade. And if you can check, before you can see that the market was trending down, trending down, trending down. Before this market started trending up here, there is a change of character exactly at this particular level here. And you can see the next imbalance we have is what? We have imbalance here. That will be what? An entry mode, an entry point. You can set a buy limit with your stop loss below here, and you target what? The next high. That's the second entry, right? Recognizing that the market is pulling back on the higher time frame, go down to the lower time frame or the substructure, wait for a change of character, then look for what? Imbalance or order block to enter and target the next what? The next higher high above, or the liquidity resting above the structure, right? Let me get rid of this. Now, let's get back to the higher time frame. Now, the last entry criteria is the most precise, most valid, and if you understand only this entry, trade will not be stopping you out and be going in your direction any longer. What differentiates this last entry criteria with the rest of the two that have been explained is the precision aspect of it. So precise and on point. And I'm going to explain it. That is engulfing candle. And this engulfing candle in a bullish case is that sweep both the highs and lows of the previous candle and close above it. Now, before you is the last entry criteria. This is the most precise, the most accurate entry that I've come across in my years of trading in this industry, especially on this particular pair, VIX 25. Now, I will explain. We talked of change of character, right? Once we want to look for a buy setup, or we want to take a buy, for example, we want on a lower time frame market trending down, a price action trending down, and we need what? A change of character on the lower time frame. Then we want to look for a place here to look for what? Position to get involved. Now, once we have a change of character on the lower time frame, we pause. One thing still remaining, and that is on the same lower time frame, we need a particular point. Once this market starts pulling back, we want it to come to any point or within this environment to give us this pattern of candlestick formation. We want to see a candle that sweeps both the highs and lows of the previous candle. And from there, we take what? Our entry on this closure of this particular what? Candle. So once we have this, we what? Take an entry on this closure and target the next what? Liquidity resting above or below that structure you are trading. I will explain. Right here, we have a market pulling back. We want to see a change of character on this lower time frame, then have this confirmation here before taking an entry. Or on this particular time frame, a market pulling back. A market pulling back. We want to see this change of character and this entry confirmation before taking over trade. Same thing here. We want to see a market pulling back on the lower time frame. We want to see this change of character on the lower time frame, then this candlestick confirmation before executing a trade. So let's go down to the lower time frame and see what happened within this particular region. And shit, come on, sorry. One by one. The market price has been trending down all the way from this particular point. Here you see high, low, lower, lower, low, lower, high, lower, low, lower, high, breakdown, come down to this particular level. You can see. Now let's brainstorm through it. Within this leg, we have a higher low, a lower low here. Then the market change character here, exactly at this particular level. This is where the structure changed. This is where we realize that this market is about to start trending up. But we'll not get involved yet. We'll hold on. One more thing remaining. That is engulfing candle that sweep both the highs and lows of the previous candle. If you observe in all of these candlesticks formation, there was no place that engulfing candle actually appeared. Right? Not until we get to this particular level here. You can see break a close above, and a close below. This is where the entry actually comes. You can see, so precise, from here downward to the upside. Let's go to the next example and see what happened there. Right, from this particular zone here, we have this price action was actually trending down, a lower low, lower high, lower low. Look at what happened here. The price actually changed exactly from this particular place. Not yet. We're not going to enter the trade here. We want to see an engulfing candle that sweep both the highs and lows of the previous candle. Look at it here. This particular candle here. You can see how precise this entry is. You see that it closed above this candle and it sweep the low of that particular candle. Right? This is the entry here. It is more precise. If you get on the whole of this particular entry here, you won't be bothered like I enter trade, it stop me out and it continue my direction. No. Look at, have a change of character, then expect what? An engulfing candle before getting involved into the trade. Even though you miss this trade, an engulfing candle is still standing here. So you can use it to what? To stack up your trades. And the moment you have a candle that sweeps the highs and lows of the previous candle, this particular lower time frame, the market keeps trending from that particular zone, right? Looking at this third example here, look at this price action was trending high, creating lower low, lower high, lower low, lower high. Where did the price change? Price change from going down exactly at this particular point. Look at it. We have a lower low, a lower high, a lower low, a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now, from here, price changed, right? So this is what we call the change of character. Now, once we have this, one more thing remaining, what is that? Engulfing candle. It pulled back, there was no engulfing candle. Look at where this engulfing candle appeared, exactly here. So it tells you when the price is about to move. It sweep, look at this one, it sweep the high of the, it sweep the low of the previous candle, and it went to close above what? The opening price of the what? The previous candle. That is your entry once you have this. This is when you launch an order here with a stop loss below, and you target what? The next what? Liquidity resting above that zone. So go back test and see. Go back test this 3 entry rule. Master exactly this third one, and your entries will be so precise and to the tip right from now henceforth. So if you find value in this video, consider subscribing, turn on the notification, and until next time, peace out.